Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Tuesday, November 26th, 2013. This is brought to you by Triton Wave Consulting, which is the home of the Triton Waves. The Triton Waves are early warning market timing indicators used in all time frames in all markets worldwide. Before we get started on the S&Ps, I wanted to show you what's become my favorite chart setup. This is courtesy of TradingView.com. What I've set up is the E-minis, and the second chart is the Aussie yen cross, and the third chart is gold, and the fourth chart is the dollar, and the fifth chart is something that I added, which is Bitcoin, because I just wanted to see what was going on here. I've been looking at Bitcoins, examining them, trying to figure out exactly how they're influencing the markets, if at all. But what I noticed was, as far as the comparisons of the charts go, that the Aussie yen has been going up with the market. When the S&Ps go down, these go sideways to down, and they've been tracking it pretty well up until the end of November, when the E-mini futures just kept zigzagging up, and the Aussie yen combination went sideways. So it's definitely sideways. Gold has also been was in the past sort of tracking the S&P. This downward move here was this downward move here. Excuse me. And then gold started moving down just on its own. Went up a little bit, and then is going down again as the S&P went down, went up a little bit, and then kept on going up. Okay, the dollar is going to act just the opposite of E-minis, and that's exactly what happened here. These went down here as this was going up, and you can see it followed down as this started. It was out of sync here, and then it started moving down some more as the S&Ps moved up. And now it's moving up slightly as the S&Ps are moving up. All right. My point is, and I do have a point, is that the normal tracking devices that I've been noticing patterns of and this, I can go back, you can look at old videos. I tracked it back like 7 or 8 years in the last couple of videos. As this goes up, gold, the Aussie yen should be going up, and it's not. It's down. Gold is usually tracking. That's down. The dollar has been going up from this base right here, and all this looks to me like if these three major indices are moving in one direction, the Dow keeps going up. Either gold is going to ratchet up like this, which I don't think it's going to do. The dollar is going to fall to pieces, which I don't think it's going to do. And the Aussie yen is going to hurry up and catch up and make this spike up here, which I don't think it's going to do, mainly because of the influence of the Japanese bank and their loosening credit. So this is what I think is going to happen. These have all been set in these three indices have all been set in motion, and I'm waiting for this to come down and to catch up with it. So given that, let's see exactly what's happening with the S&Ps. Let me just change the color here to yellow. Okay, so now we're looking at the S&Ps, and everything that I just said about it catching up is in defiance of what the waves are saying. The waves are saying that this is a nice clean shot up back here on the larger waves, all the way back here, and of course this entire thing all the way. It's saying zigzag continued up move. And I don't know where it's coming from. I think at least we may see a move into Thanksgiving unless a couple things happen. There is very light trading going on, and if there is any news that is going to move the markets and make it more volatile, then the thin trading, it's very possible thin trading could just like smack this down into what I'm now calling the minor, the Triton minor wave, which is this wave right in here. So this is the major, and this is the minor. Now we could come down here, which means that this would have to cross the zero line, and then followed by this crossing the zero line and this in succession. So these are like 144-minute charts. So there's only 3 hash marks in a day. So it would have to be pretty volatile for this to happen. So right now this looks like a zigzag pattern to the upside. And I think at one point I said that the 1272 extension would bring it up to 1823. We'll have to see if that happens. I'm going to take a look at the 21 minute, and on the minor wave right here. The minor wave actually does look like it could come down to 1776. So it could come down 25 points. So it wouldn't surprise me, because there's a lot of there could be some little sneaky volatility in here. All right, let's look at something else. All right, well, I had my counter turned off, and I've been talking for the last 5 minutes, so I'm not sure where I left off, but I'm going to cover gold again. Gold hit 1184. It came down, dipped down. This is the 144 chart on the right, which only goes back to about this area right here. So, and we can see that the 8 and the 8 and the 55 have crossed here. It's below the major and the minor EMAs, and it hasn't quite crossed the major EMA here, but when it does, I'm looking for somewhere in the area of 1153. I'm not sure, but at least to take this out, and actually with a let's do a Fibonacci. A Fibonacci retracement. Fibonacci extension here would take this down to 1112 on a 1112 on a 1272 extension. Okay, let's take a look at Apple. This is Apple on the daily on the left-hand chart, and the 21-minute on the right-hand chart. This just to review, these are the EMAs that I use for my standards right here. I'm calling this the minor wave, and this is the major wave. And when it falls, there are trades you can make when they fall in between these zones, and there are different trades when they're above these zones. When they're above these zones, these are just definitely longs. When they're below that, they're definitely shorts. So on the 21-minute, let me just okay, on the 21-minute, it is below both the minor EMA and the major EMA. So it actually Apple looks very good here. I'm not sure where it's going. I don't have a target. I don't have a target for it, mainly because the T5 T5 is below 0 and T4 is below 0, and these just keep going above and below in small moves here. Now, if we break this down to a very small chart, these moves are definitely playable. You know, instead of getting like half the wave, sometimes you can get more than that. So let's just break this down into a, let's look at this on a 610. Okay, you can see as I scroll the cursor across to the left here on the right hand chart that it's only taking up a tiny bit of space. This is only like a 3 or 4 day chart. Except that they're still very playable. So you don't want to mess with T1, T2, but T3 has a nice clean move right in here about 525, and then it comes above 0 right about here at about 517, and then it's just so it's completely down here as this is below 0 and up above 0, including today's move of $3.94 as this moved above 0. So this is still long. And the short ones you can basically, the short pieces you can basically ignore. It may come down 2 points before it heads up, but this still looks clean. If the market moves down, then you might have a problem with this just falling like this, because this is a tick chart, and with support probably about let me see what this number is here. With support at your if you're long, you want your stop at 505, because if it busts through 505, it'll go to 4. It'll go to the minor wave, which is 484, the minor EMA. All right, let's take a look at Tesla TSLA. Now this not. It's hard to use this graph because there's not a lot of information, because Tesla just came public last year. I don't have enough data, so I will use the 144, which is enough data. Again, this is the let me use the 21 over here. Again, this is the minor wave. This is the minor EMA wave. This is the major one. And I've been looking at ever since. I've been looking at Tesla as a short ever since T4 went below 0, which is about right here. So if you got in, you would have taken about you know, like 10-15 point heat to the upside, but then because it actually came in right about at 174 on October 24th and went up, would have gone against you 10 points. But if you had, so if you're buying puts, you've got to give yourself a lot of time, between 50 and 60 days, just to be sure. But you can buy a 50 delta on them. You don't have to go deep in the money. You know, like a 70 delta, because you're gonna have the gift of time. So if you bought them, they would have you would have been 10 points against you. But then at 174, it hit 118 this morning before there was a small bounce. Okay, so let's look at this. One of the things about this 144 chart is that this being the minor wave, being the minor EMA, it went below that at near the beginning of November, came back up above, and just went smack into the 21 EMA of the 144. Okay, came down, smacked into it. But this is what I wanted to show you right here, is that very recently, like in the past two hash marks, going through this going through my Triton minor wave, it went below one of the heads up is when the 21 passes the minor wave. The other one is when the 55 goes down. So this is what usually happens. It usually like takes a little bit of a bounce when this actually passes through the minor wave. Don't be surprised if this bounces up just a little bit, or it could just continue down like this. So where would this take us on this particular scenario? As crazy as this sounds, this would take us down to $76.79 on the major Triton major EMA wave. All right, I can't tell you when that's going to happen, but if we extend this period out in time right here, like down in this direction, whoops, and we extend this out in this direction. Actually, it's not going to be 76 because this is going to climb higher. It's going to probably be more like 80, between 80 and 83, and it may not happen until the middle of December. But that's the track that it's taking. It's kind of like a zigzag, kind of like down, sideways, unless it just implodes and comes down pretty quickly, and then that would change the numbers right here, because this would be, it actually would be 76, 77. Okay, to review again the ES, it's right now 6 o'clock, right around 6 o'clock Central Time on Tuesday evening. The S&Ps are down 75, and a minor correction could take this down to 1774 right here, which is the Triton minor wave, and which would also take it down to that's on the 21 minute chart, cash daytime only, and this is a 24-hour daily chart on the left, and that same scenario that takes you down to 1774 and change would take you to 1774 on the 21 period exponential moving average, which is a very likely scenario. And if it continues up from there, we'll have to watch the waves and see if it starts trending down. Right now, these are day by day, these are moving up. These are a little bit different. We're having a non-confirmation here on the 21. This is a higher a higher high on the index, but a lower high on T1, T2, T3, T4, and T5. And it's going to react to the 21 minute before it reacts to the daily. So keep that in mind. Okay, I bid you a good evening, and I will see you at the next update. Again, my name is Rodney Julian. If you'd like to get in touch with me as a consultant for your market timing, just email me at tritonwaveguy@gmail.com. Have a great evening, and I'll see you at the next update. And enjoy your Thanksgiving, and be safe.